Hi folks, I'm Hector Garcia, CPA and Advanced QuickBooks Pro Advisor. And in this video, we're going to talk about the standard chart of accounts and the account numbers. Now, there's a general myth out there, most small business owners, even accountants new in the profession, is that there is one standard chart of accounts that works for all businesses, or that every business should have a very specific chart of accounts. That's actually not true. I worked with thousands of companies over the years, and I would say that probably it's accurate to say that every single one had an entirely different chart of accounts. Now, granted, most of them were a mess and we had to clean them up and we had to get them to standards, but they don't all look the same. However, there's a specific set of standards in which they do have to follow a specific structure, and that's what we're going to be talking about today. Also, we're going to do some examples using QuickBooks, because I actually have a chart of accounts that I use for QuickBooks, for most of my new QuickBooks clients. And I kind of show you how that works so you can see sort of a real world example of what this chart of accounts looks like, whether you use a standard or a standard structure or not, exactly what it looks like in QuickBooks. That's what we're going to show you towards the second half of the video. So let's start with types of financial statements. So in accounting, every financial transaction that we create is within the purpose of preparing one of two financial statements, the balance sheet and the income statement. Now, the income statement is often referred to as the profit and loss. So I'm going to switch to that terminology, profit and loss, because that's what you use in QuickBooks. Now, when you prepare financial statements, typically you need to see both reports to get really the full context, the full picture of what's going on. And any given transaction could affect an account that lives in the balance sheet or an account that lives in the income statement, or possibly accounts that live in both. Now, the balance sheet has general high level three major type of accounts. You can have an asset, which is what you own, liabilities, which is what you owe to third parties, and equity, which is the value of the business as it pertains to the owner's capital. So whatever the owners has invested in the business, or whatever portion of the business is owned by the owners, that's going to be illustrated in equity. Then we're going to have our income statement or our profit and loss accounts, which are basically going to be one of two. It's either going to be an income account, a revenue account, or an expense account. Now let's break them down a little bit deeper. So the asset accounts are broken down into three major categories. We're going to have our current assets, which are assets that could be turned into cash, or you could convert them into a cash equivalent value asset within an operating cycle, which is typically a year. So any asset that you have that could convert to cash within a year, that would be a current asset. And then we have our fixed assets, which are any assets of value that kind of have long-term value that are not going to be converted into cash within the year. This is typical for physical, tangible things like equipment, real estate, that sort of thing. And then assets, which is everything else that doesn't fall into those two categories. Typically, when you lend money to someone else and they're not going to pay you back within the year, that would be another asset. When a business invests in another business, that would be other asset. When you have a patent or goodwill recorded into your books because you acquired maybe another business, that would be an other asset. Then we have our current liability. So that's going to be a type of liability. This is what you owe. Current liability is an obligation you have to pay a third party, and you probably will pay that off with cash within the year. Then we have the long-term liability, which is typically long-term loans or monies that came into the business that you don't have to pay back within a year. You pay them back obviously a lot longer than a year. And then lastly, we have our owner's equity, which we discussed, which is where we're going to have our owner's capital accounts. Now, moving on to the categories in the income statement or the profit and loss, we're going to have our operating revenues, which is basically our income, our sales. This is what we sell. Our cost of sales or cost of goods sold, which are direct costs, any expenditures that you make that are required in order for you to make a sale or earn income. That would be cost of sales or cost of goods sold. Then we have our operating expenses, which are basically all of our administrative, marketing, payroll, all the expenses that we need to make in order to maintain the company functional or operational. And you're going to have those expenses regardless of whether you have income or not. Those would be your operating expenses. Then you're going to have non-operating income, which is basically income that you make accidentally or not as part of the regular operations. Classic example would be interest income. You have money in the bank pays you interest. That's not what you're in the business for, but you still earn money and it needs to be recorded somewhere, that would be a non-operating income. Non-operating expense would be like paying tax, for example. That's not part of your operations. You're not in business to pay tax, but you do have to pay it. As a corporation, you have to pay taxes. So that would be an example of a non-operating expense. Depreciation is another example, which is the portion of your fixed assets that you're converting from an asset to an expense over the years to represent the reduction of value of fixed assets over time. That's depreciation. That would be another example of a non-operating expense. Now let's talk about within the world of QuickBooks. You're going to have the accounts are going to have their own specific names. For example, the current assets are going to be 3 different account types in QuickBooks. You're going to have something called a bank, which is going to be your checking, your bank, your savings account, your petty cash account. We're going to have your accounts receivable, which is all the monies owed to you from invoices you generated that the customer hasn't paid you yet. And then we're going to have other current assets, which is any temporary money that you put in somewhere that you will probably turn into cash within that year, as we explained before. Then we have our fixed assets, which are going to be your physical assets. And then we're going to have our other assets, as we mentioned earlier. That could be a loan that your business makes to someone else, or goodwill, or a patent, or something like that. Then liabilities, you're going to have a credit card. That is going to be like the opposite of a bank. This would be an account that you use to make expenditures and you pay back within a month, or maybe you even incur interest and pay it back long term, but that would be a credit card. Typically, you pay off your credit card obligations within a year, so that's considered to be an other current liability. Accounts payable is another current liability as well. That's going to be all the bills that you enter into QuickBooks that you haven't paid for yet. So this is money owed to your vendors or to your suppliers. Then we have other current liabilities, which be the other current liabilities that don't fit into credit card or accounts payable. So a line of credit from a bank would be a perfect example. And a long-term liability, best way to explain it would be like a mortgage, 5-year loan on a vehicle. And then in QuickBooks, there's a category called equity, which is all your equity accounts would just be under that one category for equity. Now, in the profit and loss or in the income statement in QuickBooks, you're going to have 5 income profit and loss categories. You're going to have income, cost of goods sold, expense, other income, and other expense. The other income and other expense would be those non-operating revenues and expenses that we spoke about earlier. Now let's talk about numbering, and this is the part where most people get confused. Is there a standard to numbering? Again, you can use whatever numbers you want in whatever shape or form, but if you want this to be a bit congruent with other accounting systems, with other accountants, you probably should follow this general rule. All the assets should start with a 1. So whether you use 4 numbers in your account numbers or 7, the maximum you can do in QuickBooks is 7. So if you whatever number sequence you use, 3 numbers, 4 numbers, 5 numbers, you want to start with a 1 when it's an asset. Regardless of which asset it is, it should start with a 1. Then all liabilities would start with 2. All the equity would start with 3. Income would start with 4s. Cost of goods sold will start with 5. Expenses could be 6s or 7s, so you can differentiate them if they're 2 type, maybe general, administrative, and sales and marketing. So the typical 2 that people tend to separate, whether it's a 6 or a 7. And then we have the other income, like interest income. Those will start with an 8. And then other expenses, as we mentioned earlier, like depreciation or taxes, that sort of thing, those will start with a 9. So as long as you follow that general sequence, it starts with that number. It really doesn't matter what other number you use afterwards. This should be pretty standard, for the lack of a better term. Now let's do a couple of examples. So for example, in the asset side, I have my checking account that would start with a 1, 1 in this example. Accounts receivable with a 1, 2. Loan to a shareholder, 1, 3. Security deposit, 1, 3 as well. Prepaid insurance, 1, 3 as well. Equipment, which is a fixed asset, 1, 5. And patent, or which would be an other asset, 1, 5. So that gives you a general idea how I would do it. Again, there's no hard and fast rule, but this will give you a general idea of what would make sense to other people looking at the financial statements that are trained in this concept of standard chart of accounts. Let's look at some examples in liabilities and equity from the balance sheet. So for example, the credit card starts with a 2, 1, just like accounts payable. Then we have a line of credit, which starts with a 2, 3. And then customers' deposits, which is deferred revenue, that starts with a 2, 3. And then you see like a mortgage starts with a 2. And then we have our equity accounts like retained earnings, capital stock for owner 1 and owner 2 that starts with 3. So that should be pretty straightforward in terms of examples of how these numberings should make sense when you put these together. Let's go ahead and jump into QuickBooks Online, and I'm going to show you kind of what this looks like in the real world. So I'm going to set up a brand new QuickBooks Online account just to illustrate this example, so we can start with a fresh, clear, brand new QuickBooks account that doesn't have any transactions in it. So I'm going to start a free trial here for a simple start. All right, so once my account is set up, this is going to ask me, hey, what's the legal name of your business? So let's just call it Garcia Corporation. And then here's the big question, which is, how would you describe what your business does? And this is where QuickBooks will attempt to create a standard chart of accounts for you, which it's fine to do. Like, for example, let's say I'm a graphic design business, and I just type graphic design. And once I pick that, and when I move forward, this is actually going to create a standard chart of accounts for me that comes from QuickBooks. Now, if you are going to import my chart of accounts, the one that I'm going to show you in this exact video, how I import my chart of accounts, the one I like to use, then we're going to pick a different option. But if you're going to just go with the QuickBooks chart of accounts, you can do that and just pick your industry at this point. This is the spreadsheet that I have, which I pre-created a whole set of chart of accounts, like sort of my own standard chart of accounts, which has a specific structure that I want and the specific account numbers that I like to use with my clients. So I'm going to import this. So I'm going to go ahead and click on next. And then once I come in here, I can go to the gear menu on the top right, and I can click on chart of accounts. And I'm going to click on see chart of accounts. And you notice that QuickBooks created a standard chart of accounts for me. I mean, regardless of what industry I would have picked, it would have done something like this. It would have created some accounts for me. So I'm actually going to have to sit there and delete them all. So I literally went down the list and made every single one inactive simply by just clicking on the little triangle there and clicking on make inactive, like that. And like this one, and I think this would be the last one, make inactive. And there's a specific subset of accounts that QuickBooks Online won't let you delete. They're just there, you can't remove them. They're the ones that you see on the screen here. I just cannot make them inactive. So now I'm to the point where I got sort of the most blank chart of accounts as possible, and I'm gonna import my chart of accounts that I have in my Excel spreadsheet, which is this guy over here. So I'm gonna go ahead and import it. Under where it says new, I'm gonna click on the little triangle and then click import. That's gonna allow me to import the chart of accounts. I'll click on browse to select my spreadsheet, which is right here on my desktop, and click on open, and then click on next. And now I have to make sure that everything is mapped here. So I got detail type, map to detail type, account name, map to account name, account number, and type all mapped together. So once all four are mapped, I'm going to click on next. Then it's going to give me a quick preview of what this is going to look like. So notice all the accounts that I created with the account numbers are all here ready to import. It's 153 accounts from my spreadsheet. Again, this is a spreadsheet that I have that has all the accounts set up. And then I'm going to click on import. And done. So now the chart, my standard chart of accounts, the one I had in my spreadsheet, is now set up into my QuickBooks Online, so you can kind of get an idea for what that structure looks like. Now, by default, QuickBooks Online doesn't turn on account numbers, so you have to turn that on. So I'm going to click on the gear menu and then go into where it says Account and Settings. And then go down to Advanced on the left-hand side. Go to where it says Chart of Accounts, Enable Account Numbers. Click on that, click on the checkbox, and then click on Show Account Numbers, and then click on Save. That's not going to enable my account numbers. So when I click on Done, and I go back into my Chart of Accounts, all the account numbers should show. Now you will notice that the ones that came with QuickBooks that I wasn't able to delete, those don't have account numbers. So we're probably just gonna not use those. But notice all the ones that I couldn't import via the download, they're not going to have account numbers, and that's actually totally okay. Now let me show you kind of what this looks like in the real world once we're entering data. So I'm going to create a journal entry real quick. So I'm going to go to New and then go to Journal Entry. I'm going to start here with my bank account. Let's assume this is my bank account here, and let's say I took out $1,000 from my bank account and I paid a couple of things with those $1,000. Let's say I did some purchases for retail items. Let me expand this a little bit. Let's say I also did some income tax preparation. I paid an accountant $200 and the purchases were $700. And let's also say I also have some equipment rental for $100, and then I'm going to click on Save. Now, journal entries are not the typical thing that we do in QuickBooks Online, but just to kind of illustrate the point, I'm going to now go into my financial statement. So I'll pull up profit and loss, and you should see those three expenses in there. So notice how this is organized. I got my cost of goods sold, the account and the account number. I have my general and administrative office expenses, equipment rental, which is a $6,000 account or a $60,000 account. Got my professional fees, another $60,000 account. And let's go into the balance sheet. And there's the $1,000 that came out on my bank account. And notice this is balanced by net income here for negative $1,000. So in a nutshell, when you're using QuickBooks or any other accounting software, it would be valuable for you to have a chart of accounts that you understand, that you like the presentation, that the numbers make sense, and that it fits to your business. If you get my chart of accounts, and I'll put it in the link below somewhere where you can buy it because I do sell them, you can import it into QuickBooks Online or QuickBooks Desktop. And again, this is not for any specific industry. This is a generic chart of accounts. After you import it, you still have to tweak it. You still have to adapt it to your specific operation. The nice thing is, once you download the kit, you can go through the Excel sheet itself, and you can look for any accounts that you don't like. So for example, let's say that you don't have life or disability insurance and you never will, just come into the Excel spreadsheet and delete it. And let's say, for example, you don't have any collection costs. So you can right click and delete that. Let's say, for example, you're never going to pay an attorney or whatever, right? You just right click and delete that. So before you import it from a spreadsheet, get rid of the ones that you don't like. My kit contains basically, it's an overachieving kit. It has a lot of extra accounts, 153 as you saw with the import. Typically, 100 accounts is enough. So I definitely have a lot of extras per se, and that's just so this could be more generic and they could work for anyone. And then you can delete the ones that you don't want as you import them. Anyway, I hope you liked this video. I hope you found this useful, and I'll see you on the next one.